Good afternoon, traders. This is Matthew GS. We are episode 33 of the 51362 EMA strategy. It's currently 10th of March 2025 and it's 5:36 p.m. in the UK. Welcome along to the stream. If you are brand new, please do subscribe. Hit the notification bell so you never miss our uploads as soon as we post them. So welcome along. We are going to look at Bitcoin. Bitcoin's been very volatile at the moment, but there has been some opportunities. But before we do get into Bitcoin, just want to share that we do have a free Telegram group, link in the description to join. FP Markets is our broker, link in the description as well. We get to use any lot size in any market. I am affiliated with TradingView, and we do get the 20 free alerts with the basic package. And at the end of the video, I'm going to be sharing the news for the week. Now, it is Monday. I do normally post on Sundays if I can, Saturdays if I am free, but very busy weekend for myself. So I am posting now, which is absolutely fine because we can still look what happened in the market from the previous week. And we will dive straight into Bitcoin. Now, I did post this Bitcoin trade that I caught on the Tuesday. So on the Monday, we had the 5 and the 13 EMA crossover here. We've had a very nice bullish candle up to the 62 EMA. We did break, and then we started to reverse from the 62 EMA. Now, my anticipation was that we do have this last down candle before this explosive up move here. So I did set a buy limit on this institutional candle, and this was the entry here. Stop loss here or just below the low. I was targeting to take out this high there for pretty much a 1-2 free trade. And what happened was price did come and reverse, and on the Tuesday we did get triggered into the trade. I did actually go for a 5% risk of this trade, and if I won this trade, that's going to be a 15% gain. And we did have a beautiful mitigation to the institutional candle here and here, and then price started to reverse. I did have in mind that there was another institutional candle, which is this one here. So price could either take out this high and carry on going higher, or it could come into this area and reverse. And when I see that it was starting to reverse, I've taken my take profit, and I was very happy with that. Could have caught the sell-off, which would have been a great trade to take on the flip side. However, I decided to stay out of Bitcoin for the sells, but there was some great opportunities to short Bitcoin. And I know the market is closed over the weekend, but we did get the reaction away from the 62 EMA, and we was below the 62 EMA here. So short position could have been taken here to catch this move down here, and currently Bitcoin is tanking. One thing to be mindful with Bitcoin is a very volatile market, and I would probably say it's more for the advanced traders to trade Bitcoin just because it is volatile, and you do get these swings and these pullbacks, and it's constantly moving up and down, which is great. But I would say it's more for intermediate to advanced traders because it's constantly having swing lows and swing highs, and it's constantly, as you know, moving up and down. So something to keep in mind. Bitcoin is a volatile market. Another volatile market is actually gold, and with gold from last week, we was consolidating, but one thing, well, my point of interest actually was this institutional candle here, this area here. So we had the move away. We've broken the 62 EMA. So really I was looking for buyers. So I did actually set again a long position, a buy limit on this institutional candle here, and take profit to take out that high there. So it's nearly a 1-to-3 trade. Let's just lock this here. And as you can see, this to the absolute pip, can you see how that has just mitigated its position here on this last down candle here? So my buy limit was activated through that wick entry here, that sniper entry, and then price is just rejected away. We've pulled away, and then this high here was taken out. So the take profit was here. I was anticipating that hopefully gold was going to go on a bullish run and go higher, but it just wasn't the case. It's just been consolidating all week. And now, as you can see, on a Monday, we have broken below the 62 EMA. So if we did have a sell stop limit order here, we could have caught this movement down here, but it's all good. I will wait for a pullback to the 32 or a pullback to the 5 EMA to continue this going lower. So don't worry about if you haven't caught this EMA breaks. There are other ways to trade this movement downwards, and gold looks like it's on a sell-off. We're looking for, I would say, sells this week for gold. Okay, this is the Bitcoin trade that I showed you previously. This is the last down candle before that move. So the analysis I've just shown you, this is that trade right here. I was anticipating, like I mentioned, for it to take this high out and carry on going higher, but that wasn't the case. But nevertheless, it was a great trade to catch. I think in the end it was a 1-to-2 trade. So that's the Bitcoin one. And the gold one was this trade here. So sniper entry. And this is a good example actually. So this is from C Trader. Can you see how these two candles here are actually blue? But if we go back to gold on the analysis I just showed you, these are actually the opposite color. So they're not bullish candles, they're actually bearish candles. But here they're all the same color. So that's why I do believe that, well, I'd say that TradingView is good to look at because it's more clearer. The institutional candles is not as clear on the C Trader. If I was just solely looking at C Trader, I probably would have missed this, but visually it sticks out very good for us on TradingView, and instantly I was like, right, this is the point of interest, and it was right because this just wicked away from that area, and then that was where price was from when I took this screenshot. So gold has been good, Bitcoin has been good, and like I mentioned, gold is another it's a volatile market. Gold, it's probably for intermediate to advanced traders, so it's just something to keep in mind. US 30, I actually stayed out of US 30 this week, and there was an opportunity to trade from the Monday. So we actually come up to the 62 EMA, and then we've had a sell-off for the whole week. So to catch this move, if you was trading US 30, that would have been a great week. Right from Monday, you could have caught this sell all the way down to Friday. So US 30 would have been great if you did catch that sell-off from the 62 EMA. There was other opportunities to get in. There was the 13 EMA crossover that happened, and then it's rejected away from the 13 EMA. So there was opportunity to sell there. There's always opportunities to trade. I normally, when I've got in on say a Bitcoin and a gold trade, I tend to stay out of other markets because I'm good in those trades. I don't want to kind of like over trade. But if there's no opportunities on Bitcoin and gold, and there was this opportunity on US 30, then I would have gotten into US 30. I mean, that's just the way I am. I'm always changing things, but yeah, at the moment US 30 is selling off, so that's looking quite good for some sells this week. GBP and USD, that's had an insane move again from the Monday. We have all the three EMAs have crossed over here, so we could have caught this bullish move up here. If you had the 5 EMA alert going off, you could have caught that here. But again, there is opportunities to keep buying this market as it's moving higher. And I know no one knows how high it's going to go, but this was a very explosive move to the upside. And it's all just about trying different things of your trading style and what kind of position you like to use, whether that's a buy stop, a sell stop, buy limit, sell limit. But what's going to happen this week, I believe there's going to be a sell-off on GBP because we are very high at the moment. So we always buy low, we sell high. And there's a lot of imbalance. There's institutional candles. So the market naturally has to come back down. So what we could do as a potential trade idea is we could set a sell stop on, say, if it breaks all these lows here. Stop loss could be maybe there, and then we are targeting TP is maybe the 62 EMA. So feel free to place that trade, but it's up to you again if you want to take that and if you want to trade the EMA breaks. Looking now onto EURUSD, the same thing has happened. We have had all three EMAs have crossed over with each other, and it's a bit more riskier to catch this from the bottom, but this is a great example of a liquidity capture candle. So it's the last down candle. It's taken out liquidity here. It's taken out these guys here, so they've sold to buy. Market's pulled away. Then this candle has wicked back down into this candle here, so they've mitigated their positions there, and then they've taken this higher. So a bit more riskier because we tend to wait for the 5 and the 13 EMA to cross over here, and then we get in, and that's absolutely fine. But if you've seen that the mitigation has happened already, then you can anticipate that the market might not come back down, so then you can just keep going for buys and then catching this really insane move up here. And I mean, if you did catch it right from the start down here, that's a 430 pip move, which is an insane move to catch. And again, I do believe that EURUSD might have a sell-off because we are very, very high. So we're looking to sell high. So ideally, again, you can trade the EMA break, the 13 EMA break, and catch this movement down, or you can wait for the 5 and the 13 to cross over and then either get in on the 5 EMA pullback or the 13 EMA pullback and catch this movement down, and TP probably would be the 62 EMA. And again, I would say that EURUSD and GBPUSD are for intermediate traders. It's a little bit volatile because they are major major pairs, but one pair that I have that I'm looking at currently, different markets, is this pink list here. And these look like slow trending markets, which are not that volatile, which is probably going to be good for beginners, I would say. So for example, look at this movement here. It's just a very nice, massive swing high. And we've got this nice swing low down here. Look at this nice movement down here. It's not, doesn't seem that volatile to me. Nice movement up here. Nice movement down there. Nice movement here. So I would say this EA is quite a nice trending, slow moving market. So it might be good for beginners. And these ones here, I don't know if you want to take note of these, but these look like good markets for beginners. USDJPY, again, looks like a market that is very slow trending market, which can be good for beginners. We have had some very nice opportunities coming up to the 62 EMA and then catching this sell down here that was looking very, very good. And we've had multiple opportunities coming into this 62 EMA and just reversing away beautifully, like catching this move down here. So UJ is looking quite good. I'm going to be looking at this more moving forward, and it's all down to you what you want to do, what markets you want to trade. You have to find your own style and how you like to trade. And the 4 hour I just seem to have the most success with, and you're just not staring at the charts all the time and just letting the alerts do their thing. So it's a nice short one today, guys. Appreciate everyone jumping on. Before I do close up today, we'll have a quick look at the news for this week. So we are Monday today, and there's nothing really happening today. I know we're pretty much in the end of the day anyways. Tuesday, there's USD red folder news. Wednesday, there's a lot of red folder news for the US dollar, so be mindful of that for Wednesday. Thursday, again, there's red folder news. And then finishing up on the Friday, there's GBP red folder news. And there's a red folder news at 2 p.m. So that's the end of the stream. I appreciate everyone jumping on. I'll try my best to do the Sunday sessions, but if I can't, I will try my best to post on the Monday. And success is always down to you. You're going to have to use the alerts and find your own style. But as you can see from the strategy, these opportunities happen over and over and over again. It would be good if you could get into the free Telegram group, Trade Masters. I will post the trades that I've got in so you can train your eye to spot those opportunities so you can get it next time. Appreciate everyone jumping on. Take care, and I'll see you in the next one. Bye.